Welcome to our channel. Today, we're diving into the predictions of one of the most respected investors of all time, Warren Buffett. His forecasts are highly anticipated due to his proven insights into market dynamics. What's he saying now? What are his expectations for 2025? And what should every investor consider? Stay with us to find out all the answers. Buffett has frequently stated that inflation is a hidden tax on investments. Recently, he emphasized that rising inflation erodes purchasing power and reduces real portfolio returns. Should inflation continue to rise in 2025, Buffett warns investors to be even more cautious when selecting assets that can withstand economic disruptions.
Inflation is devastating for investments, and it's essential to be careful where you keep your capital.
Buffett always underscores the importance of a long-term approach and investing in businesses capable of steady growth. His company, Berkshire Hathaway, is known for acquiring firms with high intrinsic value even amid market turbulence. He suggests that in 2025, focusing on real value will be even more critical as markets may be volatile.
Which companies does Buffett still believe in, and why? Share your thoughts in the comments below.
Though Buffett historically avoided tech stocks, he has recently shown interest in companies like Apple, now calling it the third major business of Berkshire Hathaway. This shift reflects Buffett's acknowledgement of digital trends with strong competitive advantages. Looking ahead to 2025, he remains cautious, focusing on tech with a stable edge. Buffett cautions investors against excessive market optimism and speculative stocks. He believes that such bubbles inevitably burst, leaving many investors at a loss. For 2025, he warns that the market might become a bubble zone, urging investors to focus on stable businesses rather than speculative stocks. Buffett is wary of over-diversification but understands its importance for the average investor. Recently, he reiterated that it would be wise to hold core capital in safe assets, such as broad market funds, rather than attempting to predict individual stock movements for 2025. Buffett has long recommended index funds to investors, particularly those who don't analyze markets professionally. In his view, they are the simplest and most accessible way for the average investor to gain market returns while avoiding excessive risk. Over time, he asserts, index funds outperform actively managed portfolios due to low fees and diversification.
For those uncertain about their ability to analyze individual stocks, S&P 500 index funds are the best option for long-term growth.
Buffett also highlights the importance of prudent debt management. Excessive debt, he says, can undermine even promising companies, especially in high-interest environments, which may persist in 2025. This principle applies to businesses and personal finance alike. Debt limits investor flexibility and heightens vulnerability in crises.
If you've taken on debt, aim to repay it as quickly as possible, especially in a high-interest environment. This will protect you from financial strain and allow you to take advantage of market opportunities.
Buffett consistently reminds investors that they are buying not just stocks, but a share of a business. This perspective is crucial, given the rising popularity of trend-focused stocks in tech and other fields. Buffett advises that investors thoroughly examine a company's business model and potential to endure long-term economic challenges. A business's resilience and intrinsic value are, in his view, far more important than short-term trend gains.
Invest in companies with solid competitive advantages rather than following trends. Businesses that can adapt and remain resilient will be better equipped for market volatility.
Buffett has always advocated for a liquidity reserve that can be used during market dips. Berkshire Hathaway consistently holds substantial cash reserves, allowing the company to react quickly to market changes. Buffett believes that a cash cushion enables investors to seize market opportunities as they arise, and he likely remains committed to this strategy for 2025, expecting increased volatility and possible market corrections.
Having available funds to invest during a downturn is a wise strategy. Keep some capital in liquid assets that can be quickly converted into investments.
For Buffett, patience is key. He often asserts that successful investing takes time, and in 2025, while many seek short-term gains, he still emphasizes the importance of a long-term perspective. His buy and hold philosophy remains central, especially in uncertain times.
A true investor knows that profits come with time. If you believe in your assets, stick with them and avoid panic selling.
Buffett advises investors to remain steady and think long-term. His philosophy is clear. If you're not prepared to hold an asset for at least 10 years, don't hold it for even 10 minutes. For 2025, he encourages avoiding speculation and focusing on stable businesses that can endure market shocks.
Want to know which stocks Buffett considers the safest for the future? Subscribe to our channel so you don't miss any updates.
Now, let's move on to the final piece of advice from renowned investor and financial strategist Ray Dalio.
His primary advice for 2025 is diversification and inflation-protected assets. Dalio advises against relying solely on the assets of a single country and instead spreading investments across different markets. He emphasizes that diversification in countries with low government debt and relatively stable economies is particularly important to minimize risks associated with the U.S. economy. Additionally, it's wise to focus on inflation-protected assets, such as commodities or assets that could benefit from rising prices. For example, agriculture and energy sectors could become promising investments in the face of rising inflation. Diversification of assets is not just a strategy, but a necessity in the context of global uncertainty. Thus, the key message from Ray Dalio is not merely caution, but an active approach to risk management. The time when one could bet on a single market or asset has passed. No matter how much we hope for the best, he believes that readiness for global uncertainty is what will ensure the resilience of your finances in the future. Remember, investing is a long-term strategy, and it's essential to be prepared for any changes in the financial markets. Thank you for watching. Only on our channel will you find key strategies and secrets to financial success that can help you invest wisely, grow your capital, and reach a new level.